So here we have a sum. This sum is also about flexible budgeting. We have some data, but before doing the data, first we'll start from the required. The required is explain why budget variances should be calculated using fixed budget figures. Okay, so why should we do that? Because we have to compare the uh, actual activity with the budget. Okay, so budget is usually a fixed one, so we have to get a flexed activity to compare. Then we do prepare a flexed budget for the appliances division for November and recalculate the budget variances. So for November or for appliance division, we have to recalculate the budget variances. Okay, so we'll read the question and see like what is given. So Francis is a manufacturing company. It assesses managerial performance by comparing actual with budgeted results. Due to staff shortage in the accounting department, figures for November budget reports have been prepared by a trainee. A copy of the budget report for November for the appliances division is given below. So he has given us sales and production volumes and units, sales, direct material, direct labor, manufacturing cost, and other fixed overheads. He has already worked out budget and actual. He also has variances here. So let's look at the points that have been given here. So the manager of the appliances division does not believe that the variances calculated give a fair assessment of her division's performance. She thinks that the budget figures are inappropriate and that a flexed budget should be used to calculate the variances. To assist in preparing a flexed budget, she provides the following information. So these are the following information. Selling price, budgeted selling price per unit is 200 and actual selling price was 196. Direct material is a variable cost and budgeted direct labor cost for a fixed element of 50,000 per month. The balance amount is a variable amount they have indicated. Other manufacturing costs are semi-variable. So there is something called as other manufacturing costs. Budgeted cost and output for the 2 months were as follows. Okay, the last previous months I think data he has given. So 4,000 is output and 210 is the cost. 3,000 is the output and 170 is the cost. There is known to be a step up of 50,000 in the fixed element of this cost for volumes in excess of 4,500 units. So if the number of units is going to go up by up to 4,500 or beyond 4,500, the step up cost would be 50,000 additional. So that's about the problem here. So let's work out the problem. So budgeted, flexible budget, actual, So this sum has to be worked out in a lot of working notes. So let's start. So sales, material, labor, manufacturing cost, and divisional fixed overhead, and finally they get profit. So we have to divide these elements in terms of variable and fixed. If possible, we can split it, or we can also show it like as it is. So let's see how we could work it out. So we'll start from the budgeted say sales number. I think first we'll type the actual because that is the most easiest. Whenever you get a sum, you have to ensure that you do the easiest things first, or just understand the easier things first, so that the balance could be done later also. Okay, I think we got all the actual numbers. So let's wait. We'll work out the sum in terms of thousands. So let's get the sales number. Okay, so sales would be uh, the budgeted selling price is 200, but it was sold at 196. That means 1078 has a price of actual price of 196, but it should have been sold at 200. So what is the answer? The answer, we have to find it out. So 1100. So 1100 should have been the sales. So this is working note number 1. So direct material is a variable cost. So however, so material we have to find out. So material would be variable. So if you see here, material has a relationship of 25% to the total cost, right? So percentage of material cost to sales, because there's no other way to find it out, or else you can find out through number of units, like that also you can find out, but that seems like very lengthy. So we can relate direct material with the sales. Okay, so we'll do that. So 250 of material is for 1000 sales. So for 100%, what it would be? It would be 25%. So let's work out and see. This is 25%. Okay, so percentage of material cost to sales is 25%. So if our total sales is going to be, should have been 1100, then 25% of that should be, I think that's 25%. should be 275. So we again got from working note 2 that it should be 275. So let's get labor. So labor, they tell budgeted labor cost has a fixed element of 50,000. The balance is variable. So we'll work out that too. So total labor cost is going to be 150. Out of 150, we have to less the fixed element. So the fixed element is 50. The balance is variable. So the variable cost of balance is 100. So now we have to work out again like this. Percentage of labor cost to sales. So it's going to be 100 divided by 1000 into 100. So that will come to 10%. Okay. So what would be the labor cost? So labor cost should be these two elements. We'll work it out. Okay, I think they have given us the units. I think I've missed it. Okay, units is 5000 and 5500. Okay, so but either way we have started working out, we will work it out. 50 variable cost is won't be 100, it will be 10% of 1100 into 10%. So I think that would be 110. Okay, 110. So the total labor cost would be 160. So this 160 you can take it and you can put it here. So labor cost is 160. So we have got up to labor cost. We still have other manufacturing. Other manufacturing costs are semi-variable and they are aligned in this kind of a setup. So we have to work out working note number 4. So other manufacturing overheads. Okay, other manufacturing costs. See, this has two elements here. So first we have to work out the high-low method for semi-variable cost. So how do you work out high-low method? So the first one is variable cost per unit equals to high cost minus low cost divided by okay, so we'll work out this. The high cost is 210 minus 170 and the high units is 4000 minus 3000. Okay, so this is given in terms of 3 zeros, so we'll put all the 3 zeros. So this is in terms of dollar. So we got the per unit amount. So we have to find out what's the fixed cost. So total cost equals to fixed cost plus variable cost per unit into number of units. So we'll substitute this in some number. Okay, any of the parity we'll substitute in October. So in October the total cost is 2,10,000, which is equal to fixed cost we don't know, but we know the variable cost per unit, which is 40, and the number of units is 4000. So 2,10,000 minus 1,60,000. So fixed cost is 50,000. Okay, so now we can find out what is the total cost for, should be the total cost for the 5,500 units. 5,500 units. So we can work out that. So total cost equal to, I think we can just copy the formula here so that you'll get a better idea. So fixed cost is going to be 50,000 plus, see, they have also told that whenever the number of units crosses 4,500 units, there will be an additional 50,000 of step up fixed cost. So that is another 50. The variable cost per unit is 40, and the number of units produced by the company is, for 5,500 we are trying to find out. So what is the answer? So 3,20,000. So 3,20,000 means we can cut the 3 zeros, so it will be 320. So this is working note number 4. So divisional fixed cost, I think it's a fixed element. So let's see what they have told. They have not told anything about that. So usually fixed costs are fixed only. They don't usually change. So 200 will be the same 200. Okay. So that's about the concept here. Now we can find out the profit. I think we can just copy from here. So the profit should have been 145 for this many units. units. Budget is 5,000. Flexible budget is we are doing it for 5,500 units, and actual is also 5,500 units. So let's get the differences here. The sales should have been 1,100, but it is only 1,078. So that is a bad thing. So we should get a negative number. Okay, that's a bad thing. See all the other. So there's also one profit development. So this profit should have been 145. It's only 118. So there's a difference of 27. For costs, it should have been 275 and it has been 286. Again, that's a bad thing. Bad. And finally, this is also, that alone is a good one. So when you totally add all the variance, that comes to 27. So this is adverse. This is favorable, adverse, favorable, favorable, and adverse. Okay. So when compared to this, we could see here the number of units sold. Okay, the number of units, I think this is variance. This is variance, and this is the result. So the variance here is 500 units. They should have sold. Additionally, they have sold 500. That is actually a good thing. But thereafter, there's no good things. So if you see the revenue here, it was favorable. See, when compared to the budget, it was favorable because budget they had to sell only 5,000. Here they have sold 5,500. But the logic here is they have sold it at a discount, and material price has gone up, and labor they have paid more. Manufacturing overhead they have like slightly they have lowered it. Divisional overheads they have lowered it, and profit, it's overall it is a bad thing. Okay, so that's about the concept here. Hope you got an idea. You could work out in this manner in terms of these percentages like that. You could also work out in a different manner. If you want, I can put it here, the alternative working. So I'll put a heading called as alternative working, where you can use units and work out. So sales should have been how much? Sales should have been see, 1,000 sales is for 5,000 units. Then what should have been the selling price for 5,500 units? So we'll find out here. It will be the same answer, but little bit short. Okay, it will be little bit shorter. Material, what should have been the amount? Okay, material, I think we can copy it from here itself. Material amount is 250. So 250 is for 5,000 units. What is for 5,500 units? We can work out here. We can quickly get the answer. Okay, 275. See, labor also we can work out in the same way. See, total labor cost is 150, right? 50 is fixed. The 100 is variable. So this is for 5,000 units. Then what has to be for 5,500 units? We have to find out. It should be 110. So 110, okay, plus 50 plus the 50, we will get the 160. So I think that's how we found it. So I think it is here. So 50 plus 110 will give you 160. Okay, so with units it's quite easy to find out, but what I have done is I have done it through percentage. Okay, both are right, but units, if you work out, it would be quite easy. Okay, so that's about the concept here.